Introduction. Foreign direct investment, or FDI, is an investment made in a firm by a foreign investor who has ownership or control over the company bulk. More specifically, FDI refers to investments made with foreign capital into domestic goods and services. It excludes foreign stock market investments. Malaysia is a nation with a strategic location because it is close to a key Asian market, but it also has a wealth of important resources, including raw materials like oil and gas. Malaysia's rapidly increasing purchasing power directly contributes to the appeal of foreign direct investment.
Objective. First, our objective is to analyze the factors that are affecting the inflows of foreign direct investment (FDI). Next, to determine the relationship between the factors inflation rate, interest rate, and gross domestic product with foreign direct investment.
I'm Sangavi, daughter of Satyaganesan, will be presenting about literature review. We have selected 10 academic articles to analyze and criticize about FDI in this literature review. The null hypothesis of our study, which is HO, is all variables. The three variables is real interest rate, inflation rate, and gross domestic product. All of these variables do not have a relationship to foreign direct investment (FDI) inflow in Malaysia. From the 10 articles, I have chosen 3 articles to support my hypothesis. The first article is written by Katrina S.F. Ho and Lina Booth on 2017. The title is Fundamentals and Country-Specific Determination of FDI, Evidence from United States and Malaysia. So, the findings from the article is, for merging Malaysia, domestic interest rate and international rate were two significant drivers attracting foreign direct investment (FDI) into the country. The article I have chosen is written by Chi Kyong Chong and Seo Yong Lam on 2010. The title of article is The Determinants of Foreign Direct Investment in Malaysia, a Revisit. So the findings from this article is, using the multivariative configuration framework and Ganger causality test, the results show that gross domestic product (GPD) of Malaysia and China literally rate and opponents level promote FDI in both the long run and short run. The third article is written by Wang Ting Au and Tuk Cheong Tang on 2009. The title of article is The Determinants of Inward Foreign Direct Investment, the Case of Malaysia. The findings from this article is, the trade opponents, interest rate, inflation rate, and the event of China joining the WTO in 2001 and the level of cooperation are significant determinants of inward FDI in Malaysia, both in long run and short run. So, from the article I've chosen, Article 1 explains about the variable interest rate. Article 2 explains about GPD, gross domestic product, and the last third article is showing about inflation rate. After the 10 articles and this specific 3 articles discussion, the new hypothesis was found. The new hypothesis of my group study is, all variables, real interest rate, inflation rate, and gross domestic product do have a relationship with foreign direct investment.
Now, we're moving on to data and methodology. Based on the literature review, the conceptual framework is as figure 1 below. Real interest rate, inflation rate, as well as gross domestic product are the independent variable that affects the dependent variable, which is foreign direct investment. The data are gained from secondary data sources, which refers to the data that has been collected by other than primary individuals. In this research, we gain our data from censuses, which are from the World Bank, and macrotrends. as well as from the government department, which is the data from the Department of Statistics Malaysia official portal. The data sources of each variable were taken ranging from 1980 until 2020. As all independent variables and dependent variables are based on numerical values, we decide that the most suitable method to analyze the data are by conducting a multiple regression analysis. Therefore, the formula used is as stated. The relation between foreign direct investment inflow in Malaysia and real interest rates, inflation rate, and gross domestic production can be formulated as follows. The outcomes of data were analyzed using descriptive analysis, whereas the correlation of the independent and dependent variables are tested using Pearson's correlation coefficient analysis. The final outcomes which hypothesis testing are gained by using multiple regression analysis. For descriptive analysis, FDI inflow rate is smaller in terms of position figure compared to GDP generated. Large value of standard deviations and variance for FDI and GDP indicate that there is large amount of variation in these two variables. In addition, slight positive readings, or it also can be called as skew to the right of all variables, indicate that the most of values are positive value and the mean is on the right side of the peak value.
Next, we will move to the Pearson correlation coefficient analysis. Based on the table, we can say that FDI and inflation rate has very weak relation with negative correlation coefficient of negative 0.11, while FDI and real interest rate have moderate relation with negative correlation coefficient of negative 0.51. In contrast, FDI and GDP has moderate relation with positive correlation coefficient value of 0.76. Next, we will move to the multiple regression analysis with the first table regression statistic. The value of multiple R in the table, which is 0.81, indicate that relationship between variable is strongly positive. When one variable is increased, the other variable increase as well, and vice versa. In this study, adjusted R-square is used to analyze the coefficient. Independent value explain 63% of the variation in the dependent value around the mean. Next, we will move to the second step in multiple regression analysis, which is ANOVA table. The value observed, F statistic, is 23.96 with associated p-value that less than 0.05. This indicates that there is at least one significant predictor among independent variable that have relation with dependent variable. And now we move to the last part of the multiple regression analysis, which is regression analysis. Based on the table, inflation rate and GDP have positive correlation with FDI as they show positive value of beta coefficient, while real interest rate has negative correlation with FDI as it is show negative value of beta coefficient. In this study, we predict that H0 all variable have no relationship with FDI. In order to reject H0, the p-value must not be exceed the value of 0.05. Based on the table, the inflation rate exceed the value of 0.05, while the real interest rate and GDP does not exceed the value of 0.05. Because there is two variable that has relationship with FDI, therefore the H0 is rejected. Therefore, this study conclude that there is two significant variable that will influence FDI inflow, which is the value of real interest rate and GDP, while inflation rate is not significant variable to influence FDI inflow in Malaysia.
Conclusion and recommendation. This study attempts to further explore the factor that affect inflows of FDI and relationship between the determinants and FDI in Malaysia over the period 1980 to 2020, which is a 41 years period. Descriptive analysis were used to assess the results of the data, and Pearson's correlation coefficient analysis were used to test the correlation between the independent and dependent variables. The use of multiple regression analysis produced the final results that are obtained during hypothesis testing. Policymakers such as the government and central bank are recommended to use the results of this study as a guideline and provide insight in order to determine the ways to attract more FDI inflows to Malaysia, as FDI inflow is as an important tool to enhance the economy of the country. Besides that, the public are advised to understand the relationship between variables with the FDI, as this study provides a useful framework which can help to understand better. In addition, next research are suggested to study truly about this study before conducting any relevant research. Lastly, as the inflation rate and GDP are determining factors for FDI inflows, the government should develop suitable policies to improve those factors in order to attract foreign investors. Apart from the inflation rate, real interest rate, and GDP, there are also other determining factors that may influence the FDI inflows to Malaysia, such as wage rates, income, economic growth, labor costs, political risk, exchange rate, and tax rate, and government spending in infrastructure. Since this variable could be the main root of the problems, it is highly recommended that next researchers who are interested in further studying this research should analyze these variables in the next study in order to identify the effect of each variable towards the FDI inflow in Malaysia. That's all from us. Thank you and bye-bye.